G'day YouTubers, Jeff McPhee's Gardening, Melbourne, Australia. In today's video, I want to give you some of my ideas on how to increase your profit, how to make your business successful by good pricing strategies. So when you're starting out, or even during your journey in your business, a lot of business owners struggle to find the right pricing for their business. And what that leads to is loss of revenue and sustainability of their business. You know, one of the main reasons I believe is that they don't understand their running costs of their business, their true running costs. You know, are they making a profit? They don't understand the market nor the customer perception, what they perceive you as, a cheap business or a well-groomed, you know, an elite business. Very important. The lack of understanding of these can lead to underpricing. So you go out and try to be cheap and try to get more work by doing that. Or on the other hand, you might be too dear, and because you're not going to get any sales. There's that balance that you've got to fit into, so that you've got to have that right pricing strategy in place to help you along. So what we're going to do, we're just going to give you my points of view on the best pricing strategies for your business. It's important to be consistent in your pricing structure in business, because customers will want that trust. They don't want you coming along and quoting Aunt Mary $1,000 for a hedge, yet bob down the road you've charged him $1,800 for a very similar job. So consistency on your pricing is so critical. A poorly designed pricing structure can make it very difficult if you're getting the cheap customers. If you're offering cheap prices, you're not getting the quality customers, because customers will perceive you as cheap, and because they're cheap, you're going to be a good marriage. And unfortunately for you as a business owner, it's certainly not going to help your profit in the future. Understanding your cost, your running cost of your business, is essential. The days, and when I started out, I worked on an hourly rate. When my previous employment, I was getting an X amount of dollars. So I thought I'd just add a little bit extra onto that. Of course, what happens as the time went on, my outgoings were greater than my incoming, because I failed to cover my business costs. And being a sole provider, it put us in a precarious situation with the family, that we weren't earning enough money to survive. So it was either the decision to change or find another job. Understanding your running costs is quite simple. You need to know two sides of the equation. One is, how many billable hours can you work a year? Now, it's easy to work out, whether in the Northern Hemisphere, whether in Australia or whatever, it's easy to work out the number of days available to work. Now, in any one day, in my area, if I get 4 to 5 hours, billable hours, and we know what a billable hour is, that's the hour that you're actually earning money. Now, when you're doing maintenance of your equipment and you're travelling between jobs and you're quoting and you're travelling to and from home and you're doing your bookwork, that's all unbillable. You can't make money out of that. So it's important that the billable hours, the hours that you're on the tools or your staff are on the tools, is that you're getting income in from the client. So when you determine the number of days, like you're going to take out the public holidays, give yourself some holidays each year. There's going to be wet weather. In time, you'll know how many roughly days it's available to you. In my case, I have 1,000 hours a year. Now, some might be more, some might be less, but at least you've got a base to start from. Now, on the other side of the equation, so we know how many days we can work, what are our running costs? It is so important to track your running costs from day one, daily, weekly, monthly, yearly. Using an accountant package like QuickBooks or Xero, or there's a variety of different packages available. Spreadsheets, pencil and paper. Write everything down, or note, or get all the information available. You know, your fuel cost, your consumables, your purchases, your insurances, you know, your wages, your tax, your goods and services tax. All those items have got to be accounted for. Now, at the end of the day, you'll make up that wage of what you want to take. In Australia, 80,000 is roughly a average wage. So if I use 80,000 as a rough rough guide. 1,000 hours, there's $80 an hour before I start adding on all those other expenses. So when businesses say, oh, what's your hourly rate? Oh, I just charge $80 an hour, I reckon that's a good rate, without any thought. Now, if $80 an hour suits you and you add up all your costs and all your billable hours and it works out to at least a break-even point, use that as a baseline, that's fine. In my case, we're talking north of $100 an hour, much more. Some businesses operate 120, 140, 150, higher, but it depends on their running costs, what's available. Another important thing in working out your running costs is the purchase of your equipment. If I buy my ute every 5 years, I borrow money on that. It might cost me $600 a month. That equation's got to come back into my hourly rate when I'm working it out. Replacing equipment. So it's not just your consumables, it's also replacing. And of course the most important part of that little equation is that profit margin. I use 20%, others use more, some use less. But now you're armed with an hourly rate that's going to ensure that you're at least breaking even and making some profit. Now the next phase in your pricing strategy is researching the market. Find out in your area what the market's receiving. Talk to other contractors. Look, in today's age it's easy to talk. What's your hourly rate? Just ask them outright. What are you charging for mowing lawns? Research, ask as many people, jump on forums, just see what everyone else is charging and see where you fit. Are you too cheap? Are you too dear? Are you in the middle? But at the end of the day, you want to stand out from the pack, and we'll discuss those a little bit later on in the video. But it's important to understand that you're not too cheap and you're not too dear. That balance of getting the right client, getting the right price, but also making sure that you're making a profit on your hourly rate. 3 strategies, I reckon, in determining pricing. One is costs plus pricing. That's where you're going to use your materials. You might buy at wholesale, especially the nursery. You'll charge the retail price and you'll charge a markup. So it's quite a simple formula to make profit. So it's the cost of doing business plus a markup. Now that markup will vary depending on items you have. 10, 20%, just depends. So cost plus pricing. Valued-based pricing is another strategy you could think about. It's where you're providing a service, a premium service to a customer. This is going to allow you to charge a premium price for premium services. And customers are willing to pay the extra if you're providing outstanding services. What this does, if you can get into this zone, it allows you to get away from the pack. Set yourself apart from the pack by providing these services. Maybe some things that you've got in mind. You may be able to provide something different to what everyone else is doing. There's plenty of ideas out there. And the other strategy, pricing strategy, is tiered pricing, whereas you'll provide a range of service from basic, medium to premium. You might be providing a basic service, but you're still attracting the right customer because you're going to provide a premium basic service. You might provide a premium where you're providing a complete garden maintenance, lawn mowing, fertilisation. You might provide all these other extras that a lot of other people don't. So you can alter your pricing structure according to the client's budget. Because we've all got budgets. We all got budgets, no matter how rich we are. Everyone does think of the dollar, and that's a good strategy to use. And the pricing strategy you come up with, don't be afraid to test and adjust. Go out into the market and test. If you win every quote, you're too cheap. If you're not getting many quotes at all, you're too dear. You've got to find that balance where you're making a profit, but also getting the right client and also providing the premium work. I like to work on about 20 or 30% because I get a good premium dollar for the work I do. I only win 20 or 30% of my quotes, but those clients will be good clients. But because I've got backup, I can provide that. When I'm starting out, that percentage obviously is going to be high if you want to put food on the table. But at the same time, keep away from the cheap work. In business, I think that it's important to have a mindset that allows you to run the business if there's no other income coming into the house. Even though your wife or your partner or your husband is earning money, your business should be treated as a sole income. Now, I was fortunate that I was a sole income, and what that did, it made me concentrate on the business to make sure it was going to be profitable. I had to do everything possible to make it work. And I think if you have that same mindset, even if you've got other income coming in the family, have that mindset, it's really going to assist getting that business going. In summary, pricing is key. Pricing is king. Treat it like that. Treat it as the most valuable tool in the business. All right, viewers, thanks for watching. Subscribe. Love to hear your comments, and shares and like would be much appreciated. And we'll see you in the next video for sure. Thank you. Bye.